What's up, YouTube fam? Welcome back to the channel. We got a very special episode for you guys because today marks officially 3 months since we started this channel and this challenge. So as you guys can see, November 7th is when we officially began. Here we are on February 7th, 2025, and we can go through everything that I've learned over 90 days of option selling. Now, just so you guys know, I had never sold a single option before starting. Every option I've ever sold has been documented on this channel. And obviously, if you go to the first video, you'll see that it was posted on November 7th or November 8th. So every single play, right, has been documented, every single trade, every single thing that I've done to get here. And now is the time to discuss the lessons we've learned and, just so you guys can learn from me, right? Obviously, there's a lot of people out there that have been selling options for a lot longer. That's why I don't proclaim to be a guru or a master. I'm just a guy who started this channel to, use it as a way to journal for myself and ultimately connect. And that's exactly what we've done. Obviously, we have a Discord with over almost 200 people and a lot of great option sellers who have been doing it much longer than me. So if you want to join, definitely make sure to check it out because you can not only network with myself, but other people as well. So with that being said, let's get into it. The first thing, and I do see some volatility as I'm making this video. I think Trump is actually talking. But the first thing, right, is that you cannot undermine the importance of which stock you decide to sell options on, right? So obviously, as you guys see, we've taken this account all the way to 25. We've taken it all the way down to 17, and now we're here at 21.3. And obviously, you can see that I'm in only TQQQ right now because I just needed a reset, and ultimately, this is a strategy that I'll get into more. The last two videos have been really covering the strategy, but I'll talk about it more later. But really, I was just tired, right? I was tired because, when I was growing the account, which I was able to do, as you guys see, like over 20% in about a month, I was chasing earnings, which right now it is earnings season, and there has been some great plays that you could have, made. Which, funny enough, the first stock that we ever traded on this channel, the first stock I ever sold an option on was a firm, which had earnings yesterday and skyrocketed. So if you would have followed my strategy and sold cash secured puts on a firm, you would have done very well. And there's a lot of stocks you could have said that about, right? Meta, Netflix, right? This was actually a great season to sell cash secured puts. And unfortunately, I missed it because I was so deep in another position with ConL, which if you've been following, you'll know what I'm talking about. If you haven't, I'll talk about it in a second. But the first thing we'll talk about, the first lesson I learned when it comes to selling options is that you need to be very smart about which stock you're choosing to sell options on, because ultimately, right, you're either doing cash secured puts, which the way a cash secured put works is you basically pick a strike, and as long as it's above that strike, you don't get assigned and you collect the premium. So in this case with TQQQ, our strike is 84. Now, obviously, it expires today, so we're going to have to monitor this position pretty closely. But as long as it expires above 84, then we will collect $170, which we've already profited like $300 or $400 off this position. I've just rolled it into higher strikes to make more money. But if it expires below 84, then we'll still collect this, and then we will buy the shares at 84. And that's why you get a break even of 83.13, because that would be the entry of 84 minus the premium that is being collected. So that's how a cash secured put works. Now, again, the beautiful part is that it allows you to get an entry lower than the current price. When I took this position, TQQQ was somewhere, I don't know exactly where it was, but it was high, right? It was up here. And obviously now it's come all the way down here. So, at the end of the day, none of us are perfect, right? None of us know exactly where the market's going to go. But selling put options rather, allows you to collect cash flow while it stays above your strike, and if it goes below your strike, that's still a much better entry than had you just bought, right? Had I just bought it, let's just say 86, and on top of that, like I said, I'm collecting a little bit of money on top of that. So, the first order of business is the stock you pick being the utmost importance, right? And I'll give you guys an example of how we took this account from, 25K to 17K was when we got involved in RGTI. So we sold cash secured puts of a $16 strike, and this was when RGTI was at 18.19, and as you see, it came all the way down to 5. So you want to avoid that, right? You want to avoid watching the stock that you're cash securing on going down 70% in a week. And listen, the average person is going to be a lot more reasonable than I am. I come from a world of being not afraid to take big risks, but ultimately selling a cash secured put on risky stocks for premium, it doesn't really make sense when you think about it, because I was only going to collect $400 or $500 and I risked 4,000 or 5,000, right? So like the risk reward of selling a cash secured put on a super risky stock, it just doesn't really make any sense. Like at least something like the TQQQ, or if we go and look at like, Affirm, Apple, Robinhood, Google, like stocks that you can trust. It's like, all right, you don't really care if we get a bear market because you can just keep rolling the cash secured put down. But if something like this, the premium of $400, $500 or whatever it was, it's never going to be worth risking that much money, right? So first rule is obviously picking, the correct stock. And, there's no answer in terms of correct stocks. And that's what ultimately led me to following this TQQQ as one of my strategies. Another strategy of something I would like to, sell options on that I haven't done yet would be like a BitX, which is, a Bitcoin with 2x leverage. Obviously, Conel was a stock that I was selling puts on for a while, but I think the monthly expiration is it just made it very exhausting for me, because waiting a month when you're rolling, or just only having 1 month of expirations to pick, it just is not optimal when there's so many weekly options, no pun intended. But with that being said, right, don't get blinded by high premiums and start taking extremely risky stocks. It's just not worth it, right? You're better off trading things like TQQQ. Even though they do present risk, at least the NASDAQ is going to be in good hands, right? Like certain stocks, if you never know they're going to go up, how can you feel confident selling covered calls or selling cash secured puts? At least covered calls, obviously you'll gain profit, but then your shares are losing value. And that's why it's very easy for people to lose money selling covered calls. If you've watched people talk bad about selling options, a big thing is a lot of people just go straight into covered calls, which will be the second thing that I've learned, is that you really shouldn't do that. One, because it's very hard to sell covered calls on something like NASDAQ and SPY when it's always going up, right? Two, why would you go straight into buying shares when you could do something like a cash secured put, get a better entry, run the wheel strategy, and then ultimately, the wheel strategy, this is, I guess, technically a wheel, put some arrows in. Don't mind my bad drawing, and that's a backwards arrow. But the point is like, why would you buy shares and then sell calls against it on an asset that always goes up? That's the first thing I've seen that a lot of people do wrong, is they decide to buy shares and sell covered calls on the NASDAQ, right? Where the NASDAQ's always going up. So you're just, covered call, it's a short call, right? So you're not shorting the market, but you're shorting the call. You think the call is going to go down. And in a lot of ways it will, right? Because if you pick the right strike and the right expiration, you'll be, on the money, you'll make money. But like I said, in a world where you're picking an asset that pretty much always goes up, it's very, very difficult to sell covered calls. Now, obviously you can roll and you can continue to raise your strike, which is what I did with this position. This covered call that I was in, which was actually down like 400 or 500. I was able to roll it when it was only like a $100 loss. And obviously now it's this new position a week later, is the expiration is starting to gain value very quickly, lose value, make me profit. But the point I'm getting at is like the reason why a lot of people tend to lose money selling options is because they go straight into selling covered calls on assets like SPY and QQQ that always go up, or they go straight into selling covered calls or selling puts on assets that are super risky and can dump a ton, right? So those two mistakes are huge mistakes that people are making, which is why my strategy is to basically sell cash secured puts with majority of my account. So as you can see, right, 84 times by 2 is 16,800, right? So 16,800 worth of collateral is in cash secured puts. And then I have, 4,000 worth of collateral in a poor man's covered call, in a leap. And then I'm using that to sell covered calls. So majority of my money is still cash secured puts. And I do believe that if you're going to run the wheel strategy, you're going to sell options, that majority of your account should be in cash secured puts, because it'll allow you to collect cash flow while get better entries. Now, obviously you're always going to have moments where there's buying power and money left over. In this case, I still only have 960. When I took this, I had 5,000, which is what led me to take this. Now listen, there's nothing wrong with having cash, right? Cash is a position. You don't have to be like me, where you're using every dollar in your account. Matter of fact, a lot of people would advise against doing what I do. But my thesis is, my strategy is that I want as much money of this account in the market. Obviously, first of all, this 20,000, it might be my full account for this account, but it's not my full portfolio. I use other brokerages, and I have, money in a lot of other places. So it's a little different, right? If 20,000 was all the money I had in the world, I'd be treating it a little bit differently. So keep that in mind when you say, "Oh, Jared, why you have all your money in the market at once?" This isn't all my money. But with that being said, I do have a large percentage of my net worth in the market. I don't keep a lot of cash. Again, I'm not going to sit here and say I recommend that. Obviously, in bear markets, you always wish you had more cash, but that's the beauty of selling puts, right? Is like, for instance, let's just say this looks like it's going to expire below 84, below my strike. I can roll this position so we can go another 7 days out. And here's where it gets really cool, is I can pick a strike like 79, collect a $22 credit, and let's just say the bear market continues, then my entry would be at 79 instead of 84, and I didn't lose a single penny. So that's something that literally can only happen with selling options, right? If you buy and just hold and it goes down, the only way you're going to lower your entry is by buying more, right? Dollar cost averaging. But with something like selling cash secured puts, you can continue to roll and lower your entry. And obviously with selling covered calls, since the calls are gaining value, you would just, not lower your entry, but lower your cost basis because of the value gained from the premium collected. So there's a lot of benefits to selling options. There's a lot of great things about it. But the number one mistake to avoid is, right, getting blinded by high premiums and selling options on a stock that can dump 60% in a week, like RGTI. Or the other mistake I made was selling options on something like ConL that only had weekly, right? Only had monthly. I just don't like the idea of having to wait months in between every option. There's so many assets out there with weekly. I'll give you another example, right? You have BitU, which in essence is basically the same thing as BitX, right? They're both 2x Bitcoin ETFs, but the big difference between BitU and BitX is notice how BitU only has monthly, and if we look at BitX, you'll notice how it has weekly, right? So let's just to show you guys that I am not making this up, right? So that's a big thing, right? So just because, right, maybe you saw BitU and you think that's a great stock to sell options on, you got to keep in mind that you don't want to be stuck selling options on something that only has monthly expirations. You're just going to feel very trapped, and that's what happened with me with ConL, and that's why I decided to exit. It wasn't because I didn't believe in ConL. It wasn't because I didn't like the stock anymore. I still think it's a good stock to get involved in. Obviously, MSTX was another one that I got involved in, but I don't really have much desire to play with anymore just because there was this random dividend that I was involved in. It was very sketchy. It came out of nowhere. I made a video about it. The video actually blew up because I think so many people were just blindsided by it. So that alone made me lose the trust in not MSTR, but Defiance Daily. Because keep in mind, these 2x ETFs, they're just meant to track the asset. They aren't the asset themselves. So don't get confused, right? Like ConL is actually a Granite Shares asset. It's not Coinbase because their plan is to 2x what Coinbase does, but it isn't Coinbase. So you don't get that confused. And if something happens that makes you no longer want to be involved in the 2x asset, that doesn't have anything necessarily to do with MSTR. Now look at the difference in chart, right? Look at MSTX's chart and look at MSTR's. The chart should essentially look very similar, right? If we pull up the Coinbase chart and we pull up the ConL, it still is very similar. Now the big difference with these 2x ETFs is the decay. And you see that when you look at March 24 of Coinbase, how it reached these highs, ConL never came back to the highs yet. But when you look at Coinbase, how it reached the March 24 highs, it's already above those. So it's very important to notice that when it comes to these 2x ETFs, it should be used for selling options and collecting premium, but it shouldn't really be used for buying and holding. If you're going to buy, use it for a quick trade to get in and out. But if you're going to buy and hold for years, you could just see in real time how Coinbase has created new highs while ConL hasn't. So a lot to consider. That's why something like TQQQ, would I necessarily want to buy and hold it? Not really. Now it does have dividends, which is cool. I actually talked about this in the Discord today. I don't love selling puts on stocks with dividends because when you sell the put, you don't get the dividend, but the dividend does come out, right? So 22 cents would come out of the share price, which will affect the cash secured put negatively, and you're not collecting the 22 cents. So I do try to avoid dividends, or I try to get out by the dividend date. Like in this case, the dividend date was, December 31st, which means the next one will be in 3 months, right? So, or whatever it'll be. Now, I don't necessarily think it's guaranteed that you have to get out, right? Like at the end of the day, 20 cents is not going to make or break, TQQQ. Like, as you guys can see, this stock is going up and down $3-4 in a day. In this case, it went from 81 to 85, right? It's moving $3-4 a day on average. 20 cents isn't really going to make or break you, but obviously the longer you hold through decay, the longer you hold through dividend dates, the worse the math is, less in your favor, right? So overall, right, in 90 days of selling options, the big mistakes I've made, the big lessons I've learned: don't go straight into covered calls, go into cash secured puts first. If anything, if you have a little money left over, maybe do some poor man's covered calls like I have. Now, as you can see, I went really far out, 2027, because I don't want my I don't want my leap to be losing value. Ideally, the leap is either going to retain value, move with the stock, right? So if we look at the delta is 84, which means it's going to move at 84% of how the stock would move. Ultimately, that's what you want for a leap. You don't want the leap to be moving like a zero date option, right? You want the leap to be retaining value so you can sell covered calls against it. And then obviously if it goes up, you'll gain profit. Or if a day like today where it goes down, you're not getting destroyed, while your covered calls, will profit. And ideally, right, in 2 years, hypothetically, let's just say if I did hold this and I lost the full 4,200, in a okay world, the covered calls makes more than enough to cover the 4,200 loss. And an even better world is the leap goes up, right? Covered calls, we just continue to roll, similar to what we did today. Now, when it comes to rolling, there's a lot of ways to make mistakes with that as well, which I'll talk about. Another thing I've learned is you really want to try to roll as late as possible, because the day of expiration, the day before expiration, right, that's when the premiums start really losing value, right? That's where theta starts really kicking in. So I'll give you an example. There was a time, it was like right around, where was it? Sorry. It was like January. It was like the middle of January, like right here, where I rolled my Connell put basically right here. And then the next day it did this. Here's the Friday, right? So let's just zoom in so you guys can see. Basically what I did was I rolled my Connell put on either Wednesday. I think I rolled it on Thursday, and then Friday it gapped up. And if I would have just waited one more day, this account would actually be at like 24 or 25K, because I was fully in the Connell position. It was like my whole account was involved in it. So since I rolled one day early, I believe what happened was the premiums were at like $8, and then the next day they were at like $2, and I had 4 of them. So obviously it was like $2,400 roughly, 600 times 4. That was just from rolling. I'm pretty sure I rolled the exact bottom on Thursday is what happened. I saw it dumping and I was like, oh, it's going to be a bearish Thursday. So I rolled down here. The next day, Connell does this. Had I just waited one day, I would have saved myself between 2 and 3 grand. And then today, it was a very similar story where TQQQ, it ended up gapping up, right? Let's just show you guys. So it started the day up very high, and I ended up rolling down here. So if I would have rolled up here, or if I would have rolled, a couple days before, it wouldn't have been as good. But since I waited for this gap down, I actually saved myself like 300 or 400. So another thing is, if you are going to roll, make sure to roll as late as possible. But obviously, if you roll too late, you can get assigned early. So be very wary of that. Ultimately, I didn't want to give you guys too much strategy in this video. I wanted to talk more about just the lessons over the 90 days. And the gist of it is selling cash secured puts first, not covered calls. Doing it on trustworthy stocks. Now, obviously, that's why I'm doing TQQQ. It is leveraged, so there is a little bit more risk than just doing it on the Qs. But this allows me to do it with obviously $84 times by 100 is 8,400. So this allows me to do it with way less, as opposed to the regular QQQ, which you would need over 50,000, 52 to be exact. And ultimately, the other thing is, with regular stocks, you really just don't know which ones are going to go up, which ones are going to go down, no matter how much you think you know companies. Like, obviously, I have this whole list of stocks, and a lot of them are trustworthy, some of them not so much. But in the end of the day, like, you truly don't know, right? Like Baba, the amount of people I know that are so bullish on Baba, but look what it's done for the last 4 years, right? Like, obviously now it does seem like it's going to start heading back up. I don't know. But the point is like, you really want to try to avoid this type of price action. And the only way to really guarantee you're going to avoid it is by sticking to something like a SPY or a QQQ. So it's like, preferably that's where I want to be selling options. And obviously, since SPY and QQQ are too expensive for the average person, we have things like TQQQ or SPXL. Obviously, if you want to get involved in crypto, my recommendation is BitX. Obviously, like MSTX and Connell, like they're good, but they're just riskier, right? You don't know what's going to happen You don't know what Michael Saylor is going to say tomorrow, right? You don't know what Brian Armstrong is going to say tomorrow. So ultimately, something like Coinbase or MSTX or MSTR, you're putting yourself at a lot more risk. You're putting all your eggs in that one basket, where selling options on, true indexes like a QQQ or an SPY, and obviously taking it a little further and doing SPXL, it's just a lot, in my opinion, a lot safer than the average stock. And like I said, that's where I find it kind of funny, is because people say, oh, it's a 3x leverage and a bear market's going to get crushed. Obviously, every stock gets crushed in a bear market, first of all. Second of all, I still would rather be putting my chips in the basket of SPY or QQQ than in the individual hand, right? Elon Musk has literally gone on stage and said, Tesla stock is too high, you should sell it, right? Like, do I want to put the risk of putting my money in the hands of a CEO who can say anything at any time? Personally, no, right? That's not what's going to make me feel comfortable. That's not what's going to make me sleep at night. So, these are just mistakes. These are lessons I've learned. And if you follow this, I think you'll do fine selling options, right? If you stick to selling cash secured puts on safer stocks or indexes, obviously using leftover money to do the poor man's covered calls, right? That's the difference. If I put the full 20K into leaps, in my opinion, that's a crazy strategy. But if you're putting, majority of your money into cash secured puts and the leftover money into leaps, that's something that I think can work really well. And if it doesn't, then it's not going to be the end of the world. So basically over the 90 days, those are most of the lessons I can think of. I didn't write anything down for this video, so everything I said was off the top of my head. I'm sure there's plenty of other lessons that maybe I'm not thinking of at the moment, but as long as you follow basically everything I'm saying in this video, then you're going to do pretty well in my opinion. And obviously, I've made mistakes. I'm not sitting here and saying I'm perfect, right? There's a reason why I took it from 25.2 to 17. And ultimately, the things I'm doing now, the strategy I'm doing now should prevent that. Maybe I'm not going to grow as fast, right? Maybe I'm not going to make 5K of a 20K account in 40 days, but I shouldn't also lose 7K in 3 days, So, these are all lessons. Like I said, it's only been 3 months. It takes 10,000 hours to be an expert. By no means am I claiming to be an expert. Again, I've only been doing this for 3 months. I have been doing it every day. I have been watching the charts. I've been an investor. I've been a trader for a lot longer than 3 months. But even if you're like me and you've been trading for longer, selling options is its own beast and you need to treat it as such. So with all that being said, I hope you guys enjoyed this video. I hope you learned a lot. I hope you feel confident. If you haven't sold options yet, I hope you feel confident to start, because it is a great way to generate income. Obviously, as long as you avoid some silly mistakes that I made, you shouldn't see your account take such large swings. There's always ways to protect yourself. And if you want to learn more, make sure to subscribe, make sure to watch as I continue to run this account and show you guys what I do. And if you want to really be able to connect with me, make sure to join our community. The link is in the description, and I'll see you guys in the next one.